Are we live? I think we are, which is good. How are you? Hope you are well. Good morning, Facebook. So today, what are we covering? Well, this is one that I've wanted to talk about for a little while now. If we go back probably about 3 or 4 weeks, I was doing a free webinar. Now, every quarter, what we'll do at TSC is we'll do a free beginners webinar and a free experience webinar, and that gives you guys the chance to come along and learn a bit from us, get some information from us, ask questions, get help and support. We try and tailor those webinars really for the people that are completely new, that don't know anything, and they're walking into the minefield that is, you know, trader training and all the information that you can get out there. And we also run an experience webinar. And on the experience webinar, I was talking about the importance of understanding risk to reward, because I get asked a lot about risk to reward, and a lot of traders come across risk to reward. And the point with this is you don't need a 2-to-1 risk to reward to make money. And this is really important because for me, I am an avid believer as a trader that when you trade, you should be looking for a greater than a 1-for-1 risk to reward. Now, those of you listening that don't know what I'm talking about when I talk about risk to reward, it's very simply the amount that you risk on a trade. So let's say you're risking 100 points versus the amount that you want to make on the trade. So for example, if you were risking 100 points and you were aiming to make 100 points, then your risk to potential reward is 1-to-1. So it's the same ratio of points risked versus points potentially gained. Now, I'm an avid believer in getting a bigger return, so a bigger reward versus your risk. Now, the challenge here is I was talking about the importance of this on the webinar, and this is where traders with some experience can go wrong. And really the message today is the difference between logic and reality. So the logic would dictate, and somebody in the webinar said, well, logically, Ali, if you trade for long enough at a 1-for-1 risk reward, as long as your win-loss ratio, which is the number of winners versus the number of losers, if you do that for long enough, if you trade with a win-loss ratio of 60%, so that means 60% of the time you're winning, 60% of the time you're losing. If you do that for long enough, you can make money. And I said to the guy, I said, yeah, you're absolutely right, you can. Because the logic dictates that, and if you play that out, it'll be true. But the reality of being a trader is actually very different. And I explained to him this. I said, let's take your win-loss ratio of 100 trades. So let's take that ratio of 60 winners, 40 losers, and push that out over 100 trade periods. So as a day trader, that might be 3 months, that might be a month. As a swing trader, that might be an entire year. So regardless of the actual time, let's take that over a data sample of 100 trades. So that means over those 100 trades, you're going to be losing 40 out of that 100 and winning 60. Now, how those trades fall, winner and loser, is going to be different depending on the strategy, depending on the trader, and depending on the data sample. Now, I said, let's take me, for example, and let's say that I am only winning 50% of the time. So over that 100 trade data sample, I'm having 50 losers and I'm having 50 winners, okay? So if you were to look at that logically, it would be, well, hang on a minute. If I go with option 1, that is winning 60% of the time, but when I win the same amount as I lose, I'm going to be better off from a win-loss perspective because I win 60% of the time. But here's the reality. If you look at my example, I'm only winning 50% of the time, so on those 100 trades, I'm winning on 50, losing on 50. But when I win, I have a reward ratio of 2-to-1, which in simple terms means when I win twice as much as I risk. So if that's my risk, I win twice as much. I said, I would rather over 100 trades have an extra 10 losers, because over 100 trades, those extra 10 losers, sometimes, yes, that might mean I have a longer losing run, but over 100 trades, I'm probably not going to notice the difference between losing on 50 of them and losing on 40 of them. So over the big enough data sample, yes, in theory, I'm better off having 40 losers rather than 50. But here's the thing, I would rather have 10 extra losers, but when I win, every winner is worth twice the loser. for two reasons. Number one, I'm going to be more profitable over that period of time. And number two, when I have a winner, if I've had two losers, when I have a winner, I win back the immediate loss. Because as a trader, it's likely that you are going to experience recency bias over a period of time. And what that simply means is, as a trader, especially in the early days, what's going to happen is you're going to be more affected by the last 5 trades or the last 10 trades than being able to look from a bigger perspective over the 100. So I would rather be in a situation where I'm having a similar amount of losers, and over the short term, I might not be noticing a huge difference between that win-loss ratio of 60-40 versus 50-50. But when I win twice as much. Now that does come with some other issues. So there is a price to pay for that, and part of the price to pay for that is the ability to be able to, when you have a winner, not grab at it at 141 and go, well, at least I've had a winner. You've got to have the discipline to be able to stick to holding that trade for twice the risk. So that only works if you are sticking to your rules, and how you stick to your rules, because I know some of you listening to this won't be sticking to your rules. That's for a completely another video. But for me personally, I would rather lose an extra 10 trades over a 100 trade period, but when I win twice as much. So that's really it. That's the lesson today. Be wary of the logic of something versus the reality of trading it. And I think it's really important based on that you listening to this make the effort to get around traders that are living and experiencing these realities. And very often, someone like me, someone like Kerry or Martin, one of our team members, we've looked at the logic and we've traded that and realized that actually the difference between what you know logically and actually what you experience in reality are two completely different things. All right. So that's all I've got for you today. Tomorrow I will be back with a market review. So we'll go and look at some of the live trades we're in. We'll go and look at the major indices. And remember, if there's anything you would like me to cover, if there's any question that you've got that you'd like me to cover in one of these Facebook Lives, drop a DM to Trader Support Club, send a message into support. And if you're listening to this as one of our free members, make sure you book in for one of our free webinars. We're actually full for the January Kickstart already. So our January 28-day Kickstart is full, but we have the dates for March. All right. If you're listening to this and you're not a member, go to our Trader Support Club website, which is just tradersupportclub.com. Click on any of the Start Right Now buttons and join us as a free member. I will catch up with you again soon, guys. All the best.